So, without further ado, I am so excited to announce our next instructor, Mr. Greg Clapinski. Greg has been with the Louisiana Legislative Auditor's Office for more than 22 years. He currently serves as manager in the Investigative Audit Services section. As manager, Greg is responsible for supervising and performing investigative audits of state and local government agencies and quasi public entities. Investigative audits are designed to detect and deter misappropriation of public assets and to reduce future fraud risk. Greg has a bachelor's in accounting from Southeastern Louisiana University and is a certified public accountant and certified fraud examiner. So, guys, please welcome Mr. Greg Kopinski.
You cannot start your video because the host has stopped it. Okay. Okay, good morning. My name is Greg Clapinski. A manager with Investigative Audit Services, and I am extremely excited to be here talking to you this morning about disbursement fraud. I'm a little unnerved in that it's a Zoom conference. I usually do presentations in front of people. So on one hand, I'm not worried about stepping over and tripping on my shoelaces, but on the other hand, it's a little unnerving having to look at my own face. But I guess if I have to subject you all to it, I can grin and bear it as well. So go to the next slide. Okay, so as Lizzie mentioned, here's some information on my background. If you look at the time that I started with the legislative auditor, the math doesn't work out. I am going on year 23 with the legislative auditor's office, all in investigative audit. In the early 2000s, I did leave the office for a short period of time, but I missed the work, and quite frankly, the cost of living in the area that I moved to was a bit too much for me. So my wife and I came back and haven't looked back since. All right, so let's get into disbursement fraud. So the graphic there looks like a personal checkbook. One of the funny things about the different agencies that I go into is many occasions I've taken these exact type of checkbooks out of agencies because at the time that's how they were recording their transactions. We've also taken out huge ledger books full of green sheets with many columns. Needless to say, we didn't have to work out that particular day. But for the most part, agencies are getting better. They're moving to QuickBooks. Some of the smaller agencies are moving to QuickBooks and more computerized options for their accounting. So we are moving in the right direction. Okay, so this slide is just kind of the description and the objectives that y'all heard about earlier, and I'm sure that you've read them. In order to obtain these objectives, I have an outline here, and this is kind of what we're going to go through. And what I want to do first is kind of give you a little information on investigative audit services, basically what we do and how we can assist you. A little bit of information on some of the statutes in the state audit law that provide for us to actually perform and conduct our investigations, as well as the legislative auditor's hotline and some fraud reporting requirements that everybody needs to be aware of. After that, we're going to go into some trends in fraud based on the Association of Certified Fraud Examiners every 2 years they publish a study on fraud, and there's some really good information in those studies. So I pulled out some highlights and we'll take a look at those. That'll kind of lead us to the fraud triangle, which is pretty much the universal model depicting why people commit occupational fraud. From there, we'll look at overall the ACFE fraud tree, and then we'll drill down into asset misappropriation and fraudulent disbursement schemes. And what I kind of did with those particular slides and the fraudulent disbursement schemes is I kind of tried to tweak them in order for us to look at them through the lens of local government. The information from the ACFE is basically they study all organizations. So I think what we'll find out is there's going to be some slight differences between state and local government and organizations, other types of organizations that are out there. And while we're doing that, we're going to go through a number of different schemes that we've seen in state and local government. Probably what's going to happen is once I start talking about these schemes that we've looked at over the past, I'm going to go on and on and on, and hopefully it'll be entertaining, but it'll probably run out of time. And so what I wanted to point out is at the end of the presentation, I included some slides that have some of the recommendations that we've put in our audits for these particular types of schemes, along with some guidance for best practices, frequently asked questions that we post on our website, and a lot of other good information to educate and help agencies implement internal controls and best practices, because at the end of the day, putting those controls in place helps prevent and detect fraud. And so the other thing along those same lines, I don't want to go too long and run out of time and kind of rush through a conclusion. So I kind of wanted to go over the conclusion up front. That way you have something to think about while we're going through these different schemes. And it's obvious. What you're going to find out during the presentation is that a lack of controls, lack of segregation of duties, and lack of management oversight provides the fraudsters with the opportunity to commit frauds without being detected. We all have limited resources, and we tend to put trusted employees in positions where they handle our business, and we trust them, and we kind of leave it at that. Basically, we're giving them blank checks and credit cards, and we're not checking to see what they're doing with them. You know, if you think about that for a second, think about what would you do if you gave your teenage child or a brother-in-law a blank check or a credit card to go buy something. Pretty much the first thing you would do is find out how much money they had spent. It kind of reminds me of the story when I was growing up. My older brothers and I, we played baseball, but we lived in a community where we couldn't get good baseball equipment. We had to drive to a neighboring county to actually find a store where we could find that equipment. So when I was a freshman, my older brother was a senior, and he could drive. So my dad gave him and myself keys to the car and his credit card to go buy what we needed for the upcoming season. Because where we lived, we couldn't get good gloves, we couldn't get good bats, we couldn't get, at the time it was flip down sunglasses, which is a little bit different from today, but you get the idea. So when we got to that store, my brother went hog wild. He bought the most glorious Mizuno infielder's glove I've ever seen. I think at that time, and this was probably 1988, he spent $400 on that glove. Well, when we got back home, first thing my dad did was look at the receipt, and he was livid. So needless to say, we broke his trust. He figured it out real quick, and we never got to do that again. Now, in hindsight, it turned out to be a very good investment for my dad and my brother. My brother played professional baseball for several years and made it to the big leagues, and I ended up detecting fraud for a living. I wouldn't give that up for the world, but I had other dreams. So anyway, basically the point is that it takes effort, it takes other people, it takes us utilizing the limited resources that we have, and it takes everyone to be able to put us in a position where we can prevent and detect fraud. So it takes the employees that we have, clerks, administrators, mayors, elected officials, to make sure that we have controls in place to reduce the opportunities for fraudsters to commit fraud. You know, in most cases, it's really a situation where being familiar with the agency's bank statements or reviewing bank statements on a regular basis would uncover most of these schemes. That's the part of this job that I love the most. I love getting into the bank statements. Whenever I go out to an agency with the auditors, first thing that I do is go find the bank statements. So much information can be found by reviewing bank statements for 3 month, 6 month, 8 month, 12 month period of time or whatever it is, even if I don't go with the auditors, I'm telling them, go get the bank statements, scan them, upload them to the network, and I'll start looking at them in my office, because I know there's a good chance that I'm going to find something. So again, it's a matter of utilizing the resources we have, getting them involved. If you take the example of a village, which is obviously a small, going to be a small agency, at the very least you have a clerk, you have a mayor, and you have 3 alderpersons. So aside of the clerk that's handling the business, you have 4 other individuals that should play some role in approving, reviewing, and overseeing the clerk's work and protecting the checkbook. So we have to utilize every resource that we have available. Okay, so getting back to my outline, investigative audit services, in a nutshell, we investigate complaints of fraud, waste, and abuse in state and local government and quasi-public entities. We have some other functions that we perform. We do background investigations for appointees to the Louisiana Gaming Control Board and the Lottery Corporation, and in certain situations we just provide information that legislators feel that they need, so we're kind of a resource for them. Authority for our investigations, it's in the state audit law, Louisiana Revised Statute 24-513, which basically says that we may conduct investigations under 4 circumstances. The first being the agency is failure to obtain timely audits. Second, the agency exhibits control deficiencies or a failure to comply with laws and regulations. 3, the legislative auditor receives a complaint of illegal or irregular acts. And 4, in the opinion of the legislative auditor and the Legislative Audit Advisory Council, if they believe an audit is in the best interests of the state, then we'll perform one at that point. Another statute to be aware of, Louisiana Revised Statute 24-523, notification. Basically, this requires, so this is law, this is a legal requirement for the agency head of an auditee who has actual knowledge or reasonable cause to believe there has been a misappropriation of public funds or assets. We do get some calls regarding this particular statute. Actual knowledge is easy. Somebody got caught with their hand in the cookie jar, send the notice. That completes your requirements. We get into reasonable cause. Some agencies don't want to, they think something happened, but they don't want to put somebody's name down because they think they may or may not be accusing somebody who may be innocent. And what I tell people under those circumstances is, look, err on the side of caution. Make the notification. You don't necessarily have to put specific details or names. And if you have any questions, call us. We'll walk you through the process. The next slide, the last statute, this basically established the legislative auditor's fraud hotline, and it requires every auditee to post notice of the legislative auditor's fraud hotline within their agency and on their website. And this is the notice here. Hopefully you've seen this within your agency, or it's on your website. Kind of down towards the bottom, you can see that you can call us. If you call us and leave a message, we'll assign that message to an auditor. They'll call you back and get all the information necessary to receive your complaint. You can fax us, you can mail your information, or the easiest way is to go online on our website, and there's an address there. You can go online, fill out a fraud report, be as specific as you can as to your complaints, and it also allows you to attach documents that support what you're saying, basically. So that's our hotline. So what do we do with the information? I don't want to spend too much time here, but basically all of the complaints are routed through investigative audit management team. If it's something that we think needs to be addressed immediately, we'll try to get to it as quickly as we can. If not, we'll put it on our list and assign it as resources become available. One thing people don't understand is that we're working on limited resources just like everybody else is. So we only have a certain amount of auditors that we can send out to look at some of these complaints. But the remainder of the complaints, some of them we refer to other departments within our office. A lot of them we provide to the CPA, who performs the annual audit. But I think what you need to know here is that something is done with each and every complaint that we receive. Okay, so in sticking with my outline, these are the Association of Certified Fraud Examiners reports to the nations. Basically what the ACFE does is they collect, or they survey fraud examiners on the cases that they've uncovered, and they take that information, and every 2 years they publish a report which basically provides a wealth of everything you need to know about fraud, occupational fraud. When I was getting ready for this presentation, I said, I need to look at one of the reports, see what the trends are. So I looked around my office and I found a copy. Unfortunately, it was this 2016 copy still in the wrapper. So I don't know what that says about me professionally. Probably not good. And then I'm wondering what happened in the last 5+ years of my life. But when I went through it, a lot of this stuff kind of stays the same. The trends kind of go up and down and back and forth. There's literally 115 charts, tables, and graphs in the 2016 report. So any which way you want to look at fraud, it's in there. So the next thing I did is I downloaded the 2020 report, and I kind of compared some of the information, some of the trends from 2016 to 2020, and here's what I found. The revenues lost to fraud, that's kind of constant. That stayed the same. I've never really heard another figure other than the 5%. The median loss due to fraud decreased. It went from 150,000 to 125,000 in 2020, so that's good. Asset misappropriation is always the most common. It's in one way or another, it's wrapped up in each case, up to 86% in 2020. The median duration of the frauds that were uncovered, good thing here, decreased from 2016, 18 months to 2020, 14 months. One of the things to note there, though, is that's for all frauds. Now, when you get more specific into disbursement frauds, billing schemes, payroll frauds, expense reimbursement, check tampering, those particular schemes tend to last more towards 24 months. So those are going on longer than the other types of frauds mentioned in the report. The most common detection method is tips. Obviously, that's, we've seen the light there. That's why we have our fraud hotline. Tips went from 39% in 2016 to 43% in 2020. And I think the reason for that is, number one, employers are starting to educate their employees more on fraud, the effects of occupational fraud, and they're also providing employees with better mechanisms by which to report fraud. So hopefully we'll keep seeing that trend in the right direction. Perpetrator, male, 65% 2020, increased to 73%. 65% in 2016, increased to 73% in 2020. The most common behavioral red flag, living beyond means, that was the same. And kind of the area that we all need to be concerned about, the contributing factor that led to these frauds, 29%, a lack of controls, 29% in 2016, and that increased to almost a third in 2020. So that's kind of, I see that as the area that we need to get control of and get that trending in the other direction. Okay, so now let's take a look at who are the fraudsters. If we're talking about the ACFE reports, you look at the 2020 report, male, 72%, age, 36 to 50 years of age, so a little bit older, that lends to people being in positions for a longer period of time, long-term employees, university degree half. So now if we look at, let's go back. So if we look at these demographics overall, that's what we see. Now, what do we see in government? Well, in government, based on my experience, let's talk about male, 72%. I think that's a little bit high. And the reason I say that is think of fraud from a cash receipts perspective. If you have to go pay your water bill or your utility bill to the village or town that you live in, who are you giving that money to? More times than not, that's going to be a female. Now, I think that's a coincidence. And the reason I say that is because regardless of who's in that position, what you're going to find is you're going to give that person your money. That same person is going to record your payment. That same person is going to prepare the daily deposit and make the daily deposit, all knowing that nobody is going to come behind them and probably reconcile the deposit to the amounts that they recorded in the utility system. So, I'm going backwards. Okay, so again, male, that may be a little high, but that could be coincidence. I think the age in government, it kind of varies. We've seen younger people kind of get more involved in government. So the age is kind of all over the place. University degree, there's a lot of fraudsters in government that have university degrees. But we get to the point where it comes down to the people that have a higher level of authority within the organization. And what we find is that in government, those are higher level employees, they're long-term employees, and they're basically first-time offenders who came into a financial need. They had an opportunity to commit their fraud, and they were able to rationalize what their actions, and that kind of leads us into the next slide, which is the fraud triangle. Now, the fraud triangle, as many of you I'm sure are aware, is kind of the universal model that explains why people commit fraud. And it was developed by a criminologist, Donald Cressy. And during the 70s, Donald Cressy studied a lot of embezzlement cases. And after studying the cases, he went and actually interviewed the perpetrators in jail. And what he found common to a majority of those perpetrators was that, one, they felt that some sort of financial pressure or financial need that they couldn't satisfy through legitimate means. Two, the second leg of the triangle is that they perceived in their job, they perceived an opportunity for them to commit fraud and get away with it. And then the third leg of the triangle is they were able to justify or provide themselves with a morally acceptable justification as to why they did what they did, and that's the rationalization part of it. So the first leg, when we talk about pressure, these are very closely aligned with the behavioral red flags, if you will. This is the person living beyond their means, somebody with financial difficulties. Now, that's kind of interesting, because anybody who doesn't have a financial difficulty, please raise your hand. And we don't need to be in the same room and know that there's probably not many hands going up. The cost of living has increased, the cost of college for our kids, the cost of private school for our kids before they get to college. So those are all difficulties that people experience through the course of their life, and it has nothing to do with our agency, but that's just what people go through. Some of the other issues that people have that we've seen, divorce, that's a huge deal for people. Addiction, gambling, drugs, those are some addictions that may obviously cause financial needs. It can be as simple as shopping. I've run into a town clerk who had plenty of money. Her husband had a good job. She had steady employment, they had plenty of money, but she just wanted extra money because she liked buying things for her daughter and her grandchild. So again, pressure, additional red flags that could be indicative that somebody has some sort of a pressure or need, control issues. They're unwilling to share their duties. They complain about inadequate pay. They refuse to take vacations. They complain about lack of authority. They have the wheeler-dealer attitude where they're just going to do whatever it is they want to without worrying about any rules, policies, procedures, or anything. And then there's those employees who have unusually close relationships with their vendors. Okay, so the second leg of the triangle is opportunity. Now, these are kind of the red flags. I like to look at these as the red flags for the environment which we create. These are the red flags: the lack of internal controls, no segregation of duties, lack of management review. If I go into an agency and ask simple questions and find that these three things exist, I know it's likely that there's going to be a problem. So these are the things that we have to control as stewards of public funds. This is the environment that we have to control. We don't have control of whether or not our employees have financial difficulties, of whether they're living beyond their means. We can't control that. And on the third leg, we can't control how they justify their actions. So this is the area that we have to take control of, and they're the red flags associated with our environment. Okay, so basically what I'm trying to say here is that this is our opportunity. It's not our opportunity to commit fraud. It should be our opportunity to prevent fraud. Finally, the third leg, again, is rationalization. So if the fraudster feels they have a need that they just can't alleviate through legitimate means, and they have an opportunity that was provided, or at the very least a perceived opportunity that they can get away with it, then the third leg of the triangle is that they find some morally acceptable justifications for their actions. And borrowing is a good example. You see that in cash receipts and the theft of cash receipts. Well, I'm just going to borrow some money from the cash register. I'm going to put it back later. People who are underpaid, underappreciated, undervalued, they feel like they're owed something, so that's their justification there. A lot of times in government, we tend to put a lot of responsibilities on people that we feel are capable, people that have shown that they can do a good job. We tend to overload them with responsibilities, and those people, they may feel like they have to do too much and that they're entitled to more than what they're receiving. Okay, now the fraud diamond is a new model. I don't know how accepted it is in researching. This is something I've found. The only reason I bring it up is because of this capability aspect. So it's pretty much the same. You have an incentive, which is a pressure, whether there's opportunity, rationalization. So the added feature on this particular model is the capability. Does the fraudster have the capability? Is he high enough within the organization? Does he have the access? Does he have the ability to cover up a fraud? And the reason I added this to the presentation was I feel that the capability only really depends on opportunity. So if we have an opportunity or an environment where the opportunity is easy to steal, then the capability doesn't really matter. So if we haven't put any controls in place, pretty much anybody is capable of committing fraud. Now, if you have a Fortune 500 company that has internal controls and internal auditors and SOX regulators and all that, well, then capability might be an issue and it might be relevant. But for the most part, I don't see that in the agencies that we go to. So just be aware that that's a different model. It's based on the extra piece there is capability, but I'm here to tell you capability is usually not an issue. Okay, so now let's take a little bit of time to look at the fraud tree, and if any, these are the three categorizations of occupational fraud: fraudulent financial statements, corruption, asset misappropriation. If you've ever taken a Becker online CPE course, you'll know that the gentleman who does most of the fraud presentations, he refers to these as lying, cheating, and stealing, which I kind of like. It makes it real simple. So here's the fraud tree: corruption, asset misappropriation, financial statement fraud. Those are the three types of fraud. We don't tend to deal with financial statement fraud very often, but I will say that corruption sometimes plays a part in some of the fraudulent disbursements that we deal with down towards the bottom in the center of the diagram. And so this is basically the ACFE's fraud hierarchy. And if you look at fraudulent disbursements from left to right, they have billing schemes, payroll schemes, expense reimbursement schemes, check tampering schemes, and registered disbursement schemes. Now, registered disbursement schemes, I'm just going to go ahead and cross that off the list right now. I see that as more of a money comes into a register, whether the person steals the funds or deposits those funds, that's kind of a cash theft thing. The two schemes under that are false voids, false refunds. We tend not to deal with that very often in the agencies that we go to. So again, from left to right, that kind of leaves us with billing schemes, payroll schemes, expense reimbursement schemes, and check tampering. So when I look at that hierarchy from left to right, I'm kind of gravitating towards check tampering, and the reason for that is more times than not, check tampering is the way that billing, payroll, and expense reimbursement schemes are carried out. So when we go through these, I'm going to probably start with check tampering, then go to payroll, billing, and expense reimbursement schemes. Okay, so check tampering, and these schemes are listed out per the ACFE's fraud tree hierarchy. The first scheme is forged maker, that involves forging an authorized signature on a company check. Pretty simple. Forged endorsement schemes, forging the signature endorsement of intended recipient of a company check. Third, altered payee schemes, changing the payee designation on the check or to the perpetrator or an accomplice. And finally, authorized maker scheme occurs when employees with signature authority write fraudulent checks for their own benefit. So earlier I said I'm going to take this hierarchy and kind of tweak it based on what we see in state and local government. And first off, what I would say is I would pretty much cross altered payee schemes off the list. We don't see that too often. I mean, I've been racking my brain for the last several days to think of. I know we came across one of these, but it just doesn't happen. And the reason it doesn't happen is because it doesn't need to. The fraudsters, they don't need to alter payee schemes because most cases the fraudster is an authorized maker. And the authorized maker is going to wind up issuing a check to themselves and then forging somebody else a second signature on the check or forging an endorsement. So to reorganize this part of the tree, here's how I would make it look. I would start with authorized maker. Again, in most cases, The fraudster is a person with a checkbook. That person writes themselves a check. They authorize them. They sign it themselves as one authorized signature. So the only thing left to do is forge the other authorized signature. If that check is made out to somebody else, well, they're still signing as an authorized maker, probably forging the second signature and then forging the endorsement on the back. So what you're going to run into in the forged endorsement case, you may see in your bank statements, you may see multiple endorsements on the back of one check. And under these authorized maker schemes and in check tampering in general, these schemes are used to carry out payroll schemes, reimbursement schemes, and billing schemes. So let's kind of look at an example of one of these schemes, and this happens to be. I initially wanted to look at this as an authorized maker, but then when I went back and reviewed some of the checks that were forged, the former director, who I assume had signature authority on the checking account, did not sign any of the checks. Now, what I did find is that she signed a lot of backs of checks. So, former director converted $34,000 of funds to her personal use through unauthorized checks. In total, there was 47 unauthorized checks over a 7-month period. Majority of the checks were forged, so both signatures on the front of the check were forged. And basically what she was able to do is she wrote herself extra payroll checks. So now we're getting into a payroll scheme. She wrote reimbursement checks to herself for expenses not incurred. So now we're into a fictitious expenses schemes. She wrote checks payable to family members for which no services were performed. So now we're kind of into a billing shell company type of scheme. And then last but not least, she made checks payable to petty cash, cashed the checks, and kept the cash. So in this particular case, the complaint that we got came from the board chairman. And the board chairman said, I think my signature's been forged. She's writing checks, haven't seen the checks. So basically our process, all right, we'll look at the checks, sit down with the person who's saying that their name's been forged, and we'll go over each and every check. Is that your signature? So we did that with the board chair. We did that with the other board member whose name appeared to have been forged on the checks. And then once we got that settled, we wanted their response. And their response was, they were not aware of these transactions and they did not authorize them. Okay, well, what does that tell us right from the get-go? And right from the get-go, that tells us they haven't reviewed a bank statement, number one. And that'll end up being clear. They also stated that the director frequently requested they sign checks without supporting documentation for the transactions, or requested that they sign blank checks because the director did not have time to write in the payee on the checks. Did not have time to write the payee on the checks. That's a problem. That's a problem that should have been addressed at that time, but it wasn't. So based on their responses, what do we know about the agency? Well, we know there's no procurement process. We know there's basically any authorization that's given on a check is basically stamping a check or signing a blank check. Obviously, they didn't require any documentation to support the purchases. Stating that they were not aware of the checks and didn't authorize them, that shows me that they didn't review any of the checks or reconcile any of the bank statements, and they didn't check to see what happened to the blank checks that they signed. So here's an example of one of the checks. The top shows that the check was made out to a family member. Now, the interesting thing about this check is let's assume the second signature was forged. And the reason I say that is because the first signature is consistent with the board chairman's signature. It may or may not have been forged, but how would one know? If you sign your name as a circle, you're asking for trouble. That shows me, would that be hard to duplicate? Absolutely not. How would you? So I don't even know how you would know that his signature was forged, but obviously it was. So again, we have a check that was made out to a family member. It may or may not have been signed in blank. It was for $1,500, and if you notice, if it's the back of the check, well, the back of the check was signed by our employee. That doesn't make any sense. If I look at this check in a bank statement, first of all, who is Michael Alford? Number one, and number two, why is our employee who prepared this check signing the back of this check? So, that was obviously a failure on the agency's part. Obviously, we gave them several recommendations, and again, those are probably included at the end of the presentation. So those are there. Okay. So now let's move on to payroll schemes. Now again, these are payroll schemes based on the ACFE's hierarchy within their fraud tree. So they list out ghost employee schemes, and those occur when a person not employed by the company is on the payroll. 2 overpayment schemes, those occur when a company pays an employee based on falsified hours or rates. And then commission schemes. Well, commission schemes, we might as well just go ahead and cross that off the list. Commissions aren't prevalent in state and local government. So when we reorganize, what we find, let me go back. Ghost employee schemes, we just don't see these in local government. Ghost employee schemes tend to occur in large organizations with a lot of employees. If you're in a village or a town that has less than 20 employees, it's going to be hard to get away with a ghost employee. So I'm sure it happens. It's just not something that we've seen. Overpayment schemes certainly happens all the time. 15 minutes, good Lord. Okay, so I was just told I had 15 minutes, so I'm going to have to speed up a little bit. But the overpayment schemes, those happen within the agencies that we go to, but it's difficult to prove. A lot of times they don't have timesheets, they don't have clear job descriptions. So in these instances, we would have to either watch them, do surveillance, or find conflicting records where they work at another job or where they're doing something else, and that's difficult at best in most cases. There are cases where we do surveillance. Problem with surveillance is it's time consuming, number one, and number two, you're taking a chance and watching somebody not work, but they may complete a timesheet the following week that says they were on leave the whole time. So it's a bit of a gamble. But back to reorganizing these payroll schemes. Mostly what we see, people with authority who write payroll checks to themselves, they write themselves duplicate checks. We see that quite a bit. I'm sorry, let's go back. The other thing we see are improper payroll disbursements, and some of the examples of those are overtime, people who are not entitled to overtime, whether it be based on policy, based on ordinance, or just simply a lack of timesheets. The other thing we'll see is unused leave payouts. You'll have an employee who doesn't complete a timesheet. They get their regular checks during the course of the year. There's no leave policy, leave's not tracked, but somehow at the end of that calendar year in December, they get a payout for unused vacation leave. So that's a problem. I did leave ghost employee schemes on the list, but commission schemes, cross it off. That's not even something that we deal with in local government. Now, getting back to these duplicate payroll checks, there's pretty much 3 easy ways that people with authority do this. First, they issue themselves 2 checks from the same fund, say it's the general fund. So their first check it's authorized, it's not a problem. Chances are they're one of the signatures and somebody else signs a check thinking it's their normal payroll check. But then they'll issue another check, sign it, forge somebody else's signature, or go get one of the other signers to sign the check. The thing to look out for there, though, is that whether or not that second check was manual or it was processed through the computerized counting system, because if you review a set of bank statements, you'll see payroll checks that are computer generated, and then you'll see a payroll check that's manual. Well, why was that manual check, not run through the payroll system? Generally, the answer is because it's a problem. The second way, checks are issued to the same employee for the same period from different funds. You typically see check number one, it's authorized, it's from the general fund, it has proper signatures, but then for the same period of time, if you go look in another fund like the utility fund, you may see a check, obviously signed by the person it's payable to and most likely forged for the second signature. And the third instance, just different methods. One check would go through the payroll system, and the second check might be through a direct deposit. They added themselves to the direct deposit for the same period. So that comes up quite a bit. And again, some of the things that we're looking for there are multiple checks, whether all the checks are processed through the computerized system or they're manual. So that's the main payroll duplicate checks. Now the second thing, improper overtime payments. This particular case is where a police chief, his compensation as an elected official was set by ordinance. He did not complete regular timesheets, but somehow he was paid $21,000 in overtime while writing tickets. So when we talked to the chief, he told us, well, I'm on call 24/7, but I really only work about 8 hours a week. Well, that's kind of odd since you're being paid overtime at time and a half on top of your salary for 10 hours a week. So when we reviewed his timesheets, we found that the overtime hours were 78% of them were worked between the hours of 8 a.m. and 5 p.m. Monday through Friday. And here's an example of that timesheet. So basically, this is duplicating the chief's salary. Now, whether or not that's fraud, waste, or abuse, that's up for interpretation, but it's something that he was not entitled to receive, and it wasn't caught by the agency. Okay. So now we're getting into falsified hours and rates. You have to look at falsified hours and rates through the lens of the public payroll fraud statute, which is Louisiana Revised Statute 14-138, and basically says, being paid for services not actually rendered or for services grossly inadequate for the payment or compensation received. Now, if you start with the second half of that sentence, payment or compensation for services that are grossly inadequate, that's a tough burden to meet because there's really no standard. It's hard to look at what somebody did and say it's grossly inadequate. So we tend to shy away from that, although I am currently working on a project where I think we're going to test that. So maybe in the next presentation we'll have tested that and I can provide some more information. But that's a difficult burden to meet, I think. Now, on the other hand, for services not actually rendered by himself, okay, that's somebody claiming extra hours. That's somebody who's, supposedly on the clock but doing something else. That's hard to prove unless you have some conflicting records from another job, from something else that says that person was doing something else, or you do surveillance. And again, surveillance is costly, it's time consuming, and it's a gamble. But we have done that. I was going to go over that, but I'm kind of running short on time, so I'm going to skip that and get into billing schemes. So again, per the ACFE's fraud tree hierarchy, they have billing schemes. They have shell company schemes, non-accomplice vendor pay and return schemes, and personal purchase schemes. Well, non-accomplice vendor pay and return schemes, we don't ever see that. It's basically sending a check to a vendor, having the vendor return it because you're going to issue them another check, and then you abscond with one of the checks, the extra check. We don't see it because it doesn't need to happen. It's too easy to do these other schemes. So I would essentially cross that off the list. Now, when it comes to shell company schemes, kind of what you think of is, the agency has checks every month or every week that are going to ABC Company at 123 First Street, and it doesn't exist, and no services are being provided, and the money is just flying out the door. Well, that does happen to a degree, but it's not necessarily how it happens, and I'll get into that in a second when I kind of reorganize billing schemes. And then the last scheme that they list is personal purchase schemes occur when an employee submits an invoice for personal purchases to the company for payment, or when an employee uses a credit card for personal purchases. And we do see that quite a bit. Personal use of the credit card, or sometimes employees set up their personal accounts for, cell phone, internet, to have the banks draft those payments out for those accounts. That does come up quite a bit. Now, again, reorganizing the billing schemes, we start with shell company, but what generally happens in these instances is we have a public employee who's going to provide some sort of good or service to his own agency, which we all know is wrong, and you can't do that per the Code of Governmental Ethics. But what they do is they use a shell company, whether it's real or fake, or they use the name of family members, or they use family member shell companies, either real or fake, or they just use other individuals to bill the services that they are providing to their agency at an inflated cost. And then somehow the money comes back to them. So that's kind of the main scheme there. And because I'm running out of time, I'm going to skip expense schemes. Yeah, I'm short on time. I'm going to skip expense schemes. Generally speaking, we don't audit expenses unless a particular person has already shown fraudulent behavior in another area. We'll look at their expenses. Here it's fictitious. I didn't mean to do that. Here it's fictitious expenses. Those are what we find. If an employee is writing themselves duplicate checks, they kind of get to the point where they feel somebody's going to notice duplicate payroll checks. The other issue is taxes are being deducted from duplicate checks. And duplicate checks, those amounts may or may not show up on a W-2, so it kind of evolves into, well, I'm going to reimburse myself for something. Reimbursements has no tax implications. There's no deductions. So I'm going to say I bought a computer for the agency and get reimbursed, and we'll see that hopefully in a second as I speed the process up here. So here's a list of some of the disbursement schemes that I'd plan to talk about. One, we have this hospital service district, and I've presented on this before. $2 million scheme over 5 years. Another, they had multiple $1 million schemes over 5 years, and those were billing schemes. And then they just had several other issues because it was kind of the Wild West of hospitals. So that's a list of some of the things that we've uncovered over the years. So let me get into one of these schemes before I run out of time. And this particular one is at a fire district. The interesting thing about this was we got the complaint from the district's board treasurer. Now the complaint was sort of ironic in that the board treasurer did not maintain the checkbook, did not provide financial information to the board, and did not maintain any of the supporting documentation for any of the checks. All those functions were performed by a different board member. So at some point, the board treasurer wanted to know what was going on with the checkbook. He ordered copies of checks from the bank, and he saw that his signature was forged on checks. So to summarize, a former Fire Protection District board member used his position to improperly direct public funds totaling $128,000 to himself and his family members. So basically what he did was he came up with a billing scheme whereby he was going to provide services, construction services mostly, to the agency through other people's names, shells, whether it was a company, a family member, or a family member's company. He was going to provide those services, bill it under those names, and at inflated rates, and receive some of the proceeds from those payments. So again, the treasurer didn't have the checkbook, the treasurer wasn't writing checks, and the treasurer was not providing this basic rudimentary financial information to the board, consisting of beginning bank balance less expenses equals amount left in the bank. That's their calculation. That's the information they provided to the board. So what do we have? So one of the things that they did was they built an outdoor kitchen. Well, an outdoor kitchen is not necessary to the fire district's operations, but they wanted to have an outdoor kitchen. They spent $20,000 on it, and yes, there is an outdoor kitchen, but the board member forged checks made payable to the shells and received part of the inflated costs back as part of his proceeds. So, you know, you have something tangible here. They poured some concrete, they built a barbecue pit, there's a sidewall, and there's this overhang. So they provided something. Okay. So after they did that for a while, and here's another example, they built a handicap ramp for this particular building. That building doesn't need a handicap ramp. At the very least, it needs some sort of a bridge between the threshold on the door that you could pull a wheelchair over the 1 inch or 2 inch threshold or whatever it was. You know, that's something that would solve that problem for $110. If it was an actual step, here's something that would solve that problem for $230. Now, what they got was some wood for $1,125. Okay, so yes, something was provided. The cost was inflated. It was in somebody else's name, but the board treasurer or the board member received some of the proceeds. So then, now we're morphing into payments for work. So we've gotten away with inflated costs through shell companies. Now we might as well just go for work that wasn't performed. So now we see checks for paint. Well, nothing was painted. Heating unit installation. The heating unit that was there was old. Vehicle maintenance, ice machine replacement, station construction, stairwell construction. These are all checks for work that was not performed. And the example I have here is vehicle maintenance. And the reason I chose this example was they used a vendor that they had previously done business with, but they wrote the check in that vendor's name. But as you will see, there's multiple endorsements on that check. These endorsements are not consistent with the other checks that were issued to that vendor. And the first endorsement looks like it could be Passman, but the second endorsement is a board member. So we went and took a statement from the vendor, and the vendor basically said, look, I didn't endorse that check. I don't endorse checks before depositing them in my bank account. I have nothing to do with this transaction. So that's how we go from providing goods and services at inflated cost to eventually providing no services and getting a check. So that particular case resulted in a guilty plea for a myriad of charges. theft over $25,000. You can see 10 counts of forgery, 6 counts of theft over $500, and splitting of profits, fees, or commissions. And with that, I think I'm unfortunately out of time. I still have several more slides. So there's some information from a hospital service district with, again, multiple $1 million plus billing schemes. And I'm just going to scroll through so I can get to what I told you. I told you I was going to run out of time talking about schemes. That's what I did. But again, what I wanted to point out is towards the back of the presentation, I did provide some recommendations for some payroll findings that we've had, for some billing recommendations, for credit cards, some basic strategies to prevent, detect fraudulent disbursements, and then we kind of get into some of these resources. On the LLA's website, we have all these FAQs, and so as you can see, there's a ton of information here that if people want to be educated, if people want to protect public dollars, it doesn't take much. The information is there. So on these FAQs, for example, if you go on our website and you click on the public funds, you'll come up with a list. You'll come up with a list of FAQs for audit law, banking law, investments, procurement code, Parish Transportation Act, public bid law, school activity funds, certain, you know, it goes on and on. So the information is out there. You know, our workshops, that information is available. One of the resources that I use when I'm looking at different things, I go to LMA's website. They have a ton of publications, everything you want to know about the open meetings law, public records, dual office holding, on and on. So the information is out there. The information is there. We have to use it. We have to utilize the public resources, the resources that we have to put to create an environment that will prevent and detect fraud. So again, I'm out of time. I apologize. Hopefully the next presentation, you know, we can go over some more schemes. We can go over some of the things that hopefully will have been adjudicated over the last, you know, over that period of time, because we do have some really good reports that have hit our website. Didn't want to talk about those because they haven't gone through the process, but once they do, I look forward to presenting those to you guys as well. And until then, I thank you for your time and attention, and I will send it back over to Lizzie. Thank you.